One of the greatest ways to build wealth in any country is ownership of a business. I mean, if you think about the wealthiest people in the world, whether it's from Jeff Bezos to Elon Musk to Bill Gates, all those people, right? The biggest driving factor in their ability to create wealth is ownership of a business. Now, in as much as not everyone will be able to have a multi-billion-dollar company or corporation, um, you can also partake in the ownership of that business. And this is why stock investing is one of the best ways to not be in the driver's seat. That means you're not the owner of the company, but you can partake in the profitability and in the losses of the company. But in this video, let us focus on the benefits. And of course, I'll mention some of the risks of investing in stocks as well. This really came to me because I felt I wanted to share this information with those that are finding ways to create wealth. Most of the time, we are often looking for the opportunities in our own ability to dictate, for example, how much we make. For example, we want to work in a place and make a lot of money and get paid a lot of money. But at the end of the day, as long as we are exchanging our time for money, we are always limited in what we can earn. But when it comes to ownership of a business or partaking in that process through, for example, stocks investing or investing in stocks of a company, you are also a partial owner. And in as much as you are not actively in that business with that, with that company, you can partake and earn money from just the operations of the business, especially if they're making money. Different examples of companies out there will be Apple, Microsoft, Google, Nvidia, all these companies around us, Costco, Walmart, all those companies are all making money somehow. And as long as they're making money, if you invest in their company by buying their shares of that company, then you can actually partake in gaining from that through a few ways. We have dividends that they pay out sometimes. Not all companies pay dividends, and sometimes they can take away their dividends. But the stock appreciation is often another way that people make money. So let me give you the definition. And by the way, if you're finding value or if you find value at the end of this video, just in case I don't mention this again, please don't forget to drop a like on it. It goes a long way. So support the channel to hopefully grow, right? That's the main purpose of this, so that we can reach more people and grow this channel. Now, I have some notes that I want to just go over with you real quickly. Now, if you can just spare me a minute, all right? A stock represents the ownership in a company, which I already mentioned. By purchasing stock, you own a fraction of the company, and your shares entitle you to a portion of the company's assets and earnings. Now, that sounds really good, especially if you can own a lot of those shares in the company. A recent example is Southwest Airlines. This guy took over about 10% of the shares, and now he controls a majority of the share of the company and can partake in the direction of the company. That is what shares can let you do. I mean, think about it. If you start a company and you partner with somebody and you go 50-50, you and that person both have control of the business and both have to decide on how the business would operate. But once somebody has more control or has more shares of the company, that person that has more shares controls the company. And these are the things that you can, even though you didn't start a business, even though you didn't, you're not in their day-to-day working, you can actually still partake in the direction of the business. Of course, if you own a lot of shares. But let's talk about retail investors like you and I, where we are not investing millions of dollars, right? I mean, unless you have millions of dollars, which is great. But the goal here is we want to use that wealth creation tool, which is the stock market, to hopefully gain the benefit of owning the share of the company. Now, how does the stock market work? Okay, which is the next thing. The stock market is a platform where buyers and sellers trade stocks. This buying and selling occur on stock exchanges such as the New York Stock Exchange or the NASDAQ. Investors can use brokerage accounts to purchase stocks. And this is where we can break out of just the traditional conversation of what stocks are and how you can invest in it. I think we should focus on rather how you can invest in it. So if you're thinking of investing in the stock market, and I know that a lot of people do have access to, well, I believe do have access to be able to invest. You can invest through maybe using a brokerage account, or you can invest through a personal brokerage account where you're not, where it's just a brokerage account where you can trade stocks. Now, in order to maximize and gain the most out of this though, it's very important that you have your own plans and your goals set out. So for example, if your goal is to invest long term, and maybe if you want to invest for retirement, then you need to invest in a retirement account because you will benefit from the tax savings that gives you. On the other hand, if your goal is to invest for the short term, let's assume that you're planning for a need that you believe will come up in the next 5 years, and you want to save up money and let that money work for you instead of putting it in the savings account, then you can consider investing in a brokerage account. Now, the downside of a brokerage account is you are somehow taxed twice. Think about it, that money that you take right now, which let's assume that you work, you've already been taxed on that money, and then you put that money into a brokerage account, and if you make profit on that, you'll be taxed again on that. But hey, that's the punishment, I guess, or the benefit, or the downside. Let's put it out, the downside of investing in a brokerage account. But at the end of the day, your money performs way more than you would have or get in a savings account or in a high yield savings account. Now, there's so many brokerage platforms out there. You have Robinhood, Moomoo, M1 Finance. There's also Fidelity, Vanguard. There's so many of them. But at the end of the day, they all offer either a retirement account, they offer a brokerage account. Some of them offer a high yield savings account. But the goal here is, if you want to invest in stocks, you need to find a brokerage account that you are familiar with and you can use long term. Because if you use something that is complicated and hard to understand or master, that may work against you. Now, it is very important that you understand the risks and rewards that comes with investing in stocks. Understand that when it comes to investing in stocks, you can lose your money. And I think this should have been the first part of this video, but you have to understand that investing in stocks means that you can lose money. But also, you have to also create a pattern or a plan of an investment plan. If your goal is to invest long term, that means let's say 5 years. That means you want to consistently invest. You can't just put, let's say you have $5,000 or you have $1,000. You can't just put that $1,000 into an investment right now and all you do is leave it and then go away. Yes, that may work for you, because if the stock appreciates or if that investment appreciates over time, then you can benefit from it, of course, because the value of your $1,000 can go to $1,200, can go to $2,000, might double. But in order to really capture different price movements or price actions over time, it's often best you invest on a consistent basis. And the reason why a lot of people would say that the stock doesn't work or the stock market doesn't work is, most people, or when I say most people, if you are a novice investor, you buy this investment and you hold it and you hope that, hey, it goes up in value by tomorrow. That's lack of patience and lack of, giving it time to work. And that way, they wake up the following day or they wake up the following month and they look to it and they say, oh, it's not going up, or then this thing is not working. I made a wrong mistake. But guess what? Yes, it might have gone down. You might have actually lost money. But if you have actually purchased it when it was $1 down, or was $2 down, $10 down, and waited over a few days or time, that recovery could have actually occurred, which means you could actually be in profit. But because you bought it just once and you were expecting it to be, to double by next day, then you find yourself getting disappointed a lot. And this is where a lot of people lose money, because what people would then do is they go and sell the stock, even though there's nothing wrong with the company. Why sell a good company? Why do you sell? And I think this is a very important aspect of investing in stocks. Before you sell the stocks of a company, understand that there must be a reason fundamentally wrong with the operation of the business. If you have a business and there's nothing wrong with the business and maybe sales are just down for, let's say, a global issue, the pandemic, something happens, then it is justifiable and makes sense for sales to be down. But guess what? the stock market reacts negatively to that information. They sell the stock goes down. And if you, as the owner of the business, are wise, you know that nothing is fundamentally wrong. It's just the economy or the environment, that the micro economics affecting the operation of the business. On the other hand, if you can then you as an investor go in and buy these stocks at a discount, then you've actually purchased the stock at discount, and when things turn around again, the stock moves up, and then you make a lot more for each stock that you hold. And this is where we can get into this conversation about long-term versus short-term investing. It is often best that you invest long-term, because if you go long-term and you invest on a regular basis, you are able to capture different price points over time. You let the dividends compound over time. You let the company itself grow. I mean, a company that is only 5 years old, or maybe it's been running for just 10 years, probably still has a lot to give. And this is where your ability to have a long-term perspective goes a long way with stock investing. All right. So without making this video too long, it is very important that you understand how to get started. How do you actually get started? It is vital that you take action. If there's something that you want to take out of this video, is to take action right now. You see, it is very easy to believe that the $10 that you have to invest is nothing, or to believe that the $20 you have to invest is nothing. But when you start small, you are able to see the growth over time. If you don't start at all, then you won't even see any progress. And that's why I encourage you to get started right now. If you can, pause this video, go and use the link below. I hope I'll put some links below anyway. Use the link below, open an account, and let your money start working. Even if it's $10 you invest, even if it's $20 you invest, use it and let it start working for you, because that is the only way you can make money while you're not actively doing the job, while you are not actively participating in the business, while you're not worried about the day-to-day runnings of the business. Otherwise, you would have to continually go to work to make money and then, survive on that. And like I said, there's a limited amount of time in a day. There's a limited amount of time we can work. So why not let your money work for you by investing in the stock market?